Well, hello everyone. Good afternoon. Welcome to After the Close. My name is Barbara Armstrong. I'm a coach with Schwab. Delighted that you are joining me to tune into this session. Thanks to all of you that are here live. If you're here for the very first time, feel free to type a greeting into the chat so that we can welcome you. It's an awesome community where we link arms, in various classes throughout the week, and we're trying to figure out this whole investing and trading thing together. One of the questions that has come up a lot in the last couple of weeks, as there's been a lot of talk about tariffs and trade and that kind of thing. And it's kind of, what do you do when you live in a shoe and people keep stepping on you, right? So today we're going to talk about how we can look at both sector rotation and protecting ourselves from, tariff shenanigans, if you will. And I'm not trying to make light of that. It is very serious business, but managing our portfolio is serious business also. And we want to be sure that we are investing in a mindful way. So that's what we're up to today. So, and Diane, welcome. And to everybody else that's new, so glad to have you all on board. And then of course, to our usual suspects, to Kevin and John, the Noble Savage, and Will and Chris and Life in the Fast Lane and Scott and Marcus and the rest of the gang. We're just so glad you're here. Okay. If you are not following me on X, consider this your formal invitation. My handle is @BarbArmstrongCS. We also have Mike Fairborn, who's a friend and fellow coach, with us in the chat, and his handle is Mike Fairborn CS. You'll want to make sure you're following Mike as well. Know that in this class, it's after the close. So our premise is that you want to become a savvy investor, but you might not have the opportunity because of a JOB or other family obligations to be able to participate in the market during a normal trading day. And things are changing in this space in that, now, 800 stocks have been added, that can now trade 24 hours a day, 5 days a week. And just because they're available to trade after the market closes doesn't mean we necessarily should, but we can. And so how do we determine if that's a stock that we might want to put an order in after the close or not, or just tee up an order to fill the next day? So we're going to discuss that as well. Know that while we're using technical analysis, other approaches, including fundamental analysis, being aware of earnings reports, what's happening in the markets in general, hence our conversation on tariffs and trade, that helps us make a more informed decision. We talk about options, those carry a high level of risk and aren't suitable for all investors. When we use a stop loss order, it doesn't guarantee that we're going to get out at a particular price. If the stock were to gap down, we could be out at a lower price. And we do use the Paper Money software application on the Thinkorswim desktop, which is a brilliant place to be able to learn, become familiar with the platform and the strategies you're trading before you consider trading them in your live account. So we're going to, look at some charts, and then we are going to place some example trades. We also have a bit of a portfolio shaping up. And at the beginning of the year, we said, okay, we've inherited $1 million. Now, if you had actually inherited $1 million, you might not say, I'm going to take 4 or 5 or 6 months to get fully invested. You might have taken a portion of it, depending on your age and stage, and put it into short-term paper, that's paying, 4% or whatever it's currently paying. You may have taken a portion of it and put it into an index that tracks the S&P 500 or the NASDAQ or the Dow. And Connie teaches a class on ETFs. I believe it's Mondays. And, she talks about those types of investment strategies. We don't talk about those in this class. So we're just pretending we have $1 million. We just want to invest in various stocks and options. And we also have a number of goals. And so one of our goals, and it's important to understand what you want to get out of your investing in trading, before you get started. And one of them might be, actually, I can not have to do it totally natural, master. So one of your goals might be protecting your money, that $1 million, that you don't want to just spend all of the principal and have a great time and all of a sudden have a lot of friends coming out of the woodwork that you didn't even know you had. And in 5 years, most of the money's gone. So you may want to protect that income. You may want to grow your base. So you may be looking for growth. And then you may also think like, oh man, I was having trouble paying all the bills, or I've always wanted to do this, but it seemed like there were other financial priorities. Maybe you want to generate some income so that you can travel or buy a new car, or be generous with your, family, or whatever it might be. So understand what you're aiming for. And we're going to do a number of different trades that, are designed to do all three of those things. So the first stock I wanted to look at was, I call this one Google. This is Alphabet. And, when we look at, maybe this door number 3, creating income, could we use Google to do that? Being generous with your teachers, always a good thing, although I can't accept gifts, sadly. Yeah, but I like the way you're thinking. So with Google, if we kind of back things up and say, we're on a 1-year chart here, say, well, how much has this gone up? And if I change my drawing tool, our low here back in March of last year, about a year ago, was that 130, and it came up to 207. So, at one point it was up 57%. Even now it's up 42%, which is beating what the S&P and the NASDAQ have done over the last year. So, but it went through this period of consolidation. And what do we call this pattern? Go ahead and type that into the chat. I like this to be participatory. So if we look at this pattern, we would say, okay, I see a cup and a handle. And the way someone might measure this is to say, okay, this has gone, and I'll draw an official line, from about 150 to 180. So if this range here is about $30, I might expect this to go up about $30, so $211 or so. Look at that, it came up to 207. But it's now, we have another crack at it, because now it's trading at close today at 186. And when it comes to tariffs, is this a product that has to be physically boxed up and moved across a border? It is not. It is not. And so is it kind of tariff agnostic, if you will? One might say it is, because this is a service. It's not a product. Okay, so let me just wipe my slate clean. There we go. So I'm just going to draw my official line now down here. So we've got our cup and handle. So 148 to 181. Let's round up. We'll call it 149 minus 181 minus 149. Yeah, $32. And so a potential target might be that, 213-ish. And, could we also, so here's a potential target. around that 213 level. But could we do this as a swing trade and just buy some shares of stock? Because we've got $900,000 sitting in the kitty. You know, so why not? What if we said, hey, I'd like to buy it. And if there are shares trading in the after hour, and one of the ways we tend to be able to see is if the bid-ask spread is still pretty tight. And it is, it's only 7 cents. So, you know, and for a $186 stock, we have a pretty attractive PE ratio. It's not under 20, but at 23, it's not exorbitantly high. And it crossed. So like somebody said, it did a breakout and it came back and retested. And so we're going to look, we can have a position size up to 50,000, you know, and how did I come up with that? Well, we said our max position size is 5% or 50,000. And what we could do if we wanted to do this as an income trade, I'm getting a little fancy here, we could put in an alert. So we could buy, say, 200 shares, because 300 shares would be, you know, 56,000. It would be a little over our target. So we could buy 200 shares and put in an alert when it gets to about 200 or 205 and say, when it gets there, we'll add a covered call and then have someone pay us to buy the stock from us. At least this is the plan. Now, what if the plan doesn't work out? Because I'm a big believer that before you enter a trade, you should know when you're getting out, both if the trade goes for you or against you. And so the idea here, we're going to come to the trade tab. We're going to buy 200 shares. Why not 50,000 worth exactly? Well, because we want to be able to sell that covered call a little down the road, right? And so where might we put our stop? Well, we might say we're going to go 3% below this support level because it broke out above this. This was acting as a ceiling. And it looks like it's become a floor or a support level. So we'll go 3% below that. And I already did the math on that. That's 176.12. So if I buy it now, I'm risking $10 a share. So I'm risking $2,000 if I buy 200 shares. But, you know, we can risk up to 3,300. That would be a third of 1% of our account value. If you wanted to go to half of 1%, that would be 5,000. So we're going to put our stop in at 176.12. Sorry, yeah, 176.12. And we're going to make our stop good till canceled. And again, it could gap down. We could get out for less than that. And then we're going to put this in as extended. In other words, if we can get that filled right now, we're cool with buying it right now. Okay, paying 186.05. So we're going to confirm and send. And then this is going to go into, we could call it a stock with a target. That's all I have. But once it fills, we could just say, you know, stock with the intention of selling a covered call, but it's an income generating strategy. So actually we can just let this fill, and I meant to buy 200 shares. So I'm going to make that 200. So we'll let that fill and then we'll create a new category for it. Okay. So we're just waiting for that one to fill. It's saying, hey, the last one filled at 186.14. But we'll just let that one percolate. And when that fills, then we'll create a new category for it and we'll move it over there. Let's now look at, you know, if we're mulling things over and saying, well, what sectors have been strong? Or what sectors might provide stocks that are more service oriented? And, you know, the communications sector came to mind. So if you're saying, well, like, I don't really want to have to, one way you can see is to come to the Market Watch tab and then come down to visualize. And, you can see here's the tech sector, here's communications. You could jot them down, but I just did a really quick scan. I came over here. I said, show me everything in the S&P that intersects with, and I came down to industry group and said with communications. Bada bing, bada boom. So select all sectors, run the scan. There's only 22 in there. And then you come up here, oops, and you save it. And I called them all sectors and then whatever you want to call it, sectors communications. Now I've already done that one, but here we are. And so, and then I link my chart to my watch list and to the trade tab. They all have a number 1 here, as you can see. And then I just started clicking along. So Google was one of them that looked interesting. And then Verizon also looked interesting. And, for a lot of, this is a 1-year chart. And, where has it gone in the last year? Kind of a whole lot of nowhere. Buffalo Brown is asking, how do you create categories? I'll show you after we place this next trade, okay? Okay, so if we're playing I Spy, and first of all, I did this with the last one, so just to be treating everybody the same, here's where we started last year, and here's where we are now. Don't ask me why that isn't showing. Yeah, up 2%. Like, that is kind of pretty sad sack results, isn't it? But, it came up to 45 and then came all the way down. But this last earnings report, it kind of gapped to the upside and has been pretty bullish since. So, and it's breaking above here. And what pattern do we see? Kevin, you've got it. Inverted head and shoulders. So it is a kissing cousin of the cup and handle, in that if we look at this, here's our handle, here's our cup. But now when we add, the other handle, it's now an inverted head and shoulders. So now we see, 1 shoulder, 2 shoulders, and the head. And you'd measure from this bottom here. And, so, might this, and today it's breaking out. Now, could it be a fake out? It could. It totally could. But if we're looking at investing for the longer term, what other things might be appealing about this stock? Well, pays a dividend of over 6%, has a PE ratio of under 10, which means, for every $8.90 you invest in this company, it generates $1 of profit. That's not bad. And, what are its cousins or its competition doing in the industry? So, how is T-Mobile doing? How is AT&T doing? Well, let's have a quick look. T-Mobile? Yeah, hitting a new 1-year high. It's been just crushing it. How about AT&T? Crushing it. So might this one be coming back around the bend? And by the way, we have AT&T in our portfolio. We bought it back here on this day. We had put in a conditional order, and it filled the next morning. Okay, so if we look at this, maybe we're saying, hey, here's another way I can generate income in my account. If I can get a dividend yield of 6.6%, and if someone's looking for value stocks, this combination of price earnings ratio and dividend looks mighty appealing. Might that help push the price up? And then I can look at whether, I want to continue to hold this asset or not. Now, where might we put an exit on this? I'm just going to move this down here. We might say, well, hey, if I look at today's candle, the low of today's candle, if it goes 3% below that, I don't know if I want to stay in for it to go all the way down to 37. Now, you might also say, hey, you know what? Would it be so bad? And I'm just trying to hit you with stream of consciousness by an investor. Would it be so bad if it came down here and I'm earning 6.6% if it traded in a range? Could I maybe every time it comes up to the ceiling, if this doesn't go up again tomorrow, sell a covered call and then buy it back if it comes down? Meanwhile, I'm collecting 6% if your expectation is that it's likely to continue to the upside. Now, in that case, you might say, I'm going to take this 37.83 and I'm going to put it 3% below that. Now, what does doing that mean? It means you can buy fewer shares because you're taking more risk per share. So you're risking, 36.69 minus, call it 41. You're risking $4.30 a share. And how much can we risk? Up to $3,300. So if I then take my $3,300 and I divide it by $4.30 a share, well, I can still buy 767 shares. I could buy 700 shares. Now, if I bought 700 shares at $40, would that be more than 50,000? So 700 times 40, that's only going to be 28,000. So we can do that. And it meets both our position sizing requirements. It's not over 50,000, and at 700 shares, we're not risking more than 3,300 if it comes down and hits our stop, which would we be below here. The other thing, like if we look at this and we say, what was that number again? 37.83 times 0.97. Okay, that was 36.69 for Verizon. If I come to the trade tab and I come out to options, now this just has monthly options, but if I come out to March and look at the 37 strike, the probability of it being below that, so the probability of our being stopped out is less than 9%. So the probability is very high that we get to stay in this trade. Where if I said, I don't want to do that, if it goes, I'm assuming that this is breaking out, it's going to stay above $40.80. If I put my stop 3% below that, at 39.50, so closer to 40, then my odds of being actually nicked out, and I looked at the wrong thing here. This is under 9%. That's the probability of it being in the money, but it has a 17% chance of coming down and touching it and triggering our stop at 37. At between 39 and 50, it's somewhere between 35 and 60%. So the probability of being stopped out is much, much higher. So somebody's asking this question, and it's a thoughtful question. This is, the black line is a 100-day moving average. It's like, do you want to wait for it to move above that? And we could. But if we see this pattern and we're saying, gee, I'd like to get in sooner rather than later, this has not really been acting as a support level, has it? Neither has the 30-day moving average. It's been weaving, through all of these moving averages. So what we're placing this trade based on is the strength of the sector, because if we come and we look at our sectors and we say which sector has been crushing it over the last 3 months, There's communications, number one, and the strength of its neighbors. And then the strength of this inverted head and shoulders pattern. Now, some might say better to wait for it to come up and retest, and we absolutely could do that. But we only get to meet once a week. So we're going to go ahead and we're going to place this trade. We're also going to put an alert in here around this $44 level. So we're going to create an alert and say, you know, when it goes above 44.27, do we want to consider exiting the position? You know, that's something we could look at. Or selling a covered call, which could be another way of exiting the position, right? Okay. So we're going to go ahead, trade tab, right click. We want to buy custom with a stop, and we are going to buy 700 shares. Oops. And we're going to put our stop at 36.69 so that if it does go back into that range, we're not going, great, I just made a donation to somebody else's profitability and it wasn't mine, so we can leave this in the extended hours because that's where we are now. And, here's our bid-ask spread. It's still pretty tight, isn't it? So confirm and send. And this one, we're going to put in our dividend stock group. Okay. And the entry is based on that inverted head and shoulders pattern. Now, when we get into this trade, if this goes up like this, let's say, and then it comes back and bounces like the Goog did, could we then take the stop that is going to be down here and say, okay, time to move that sucker up and move it to here? Absolutely. And would that make sense at that point? Yeah. Like, part of managing your portfolio is to review your stop loss orders on a regular basis and move up the stops when a new support level is established. And this might be when some traders would say, yeah, this new support level is established. How often should you do that? Well, some might say for stock positions, I'm going to do that once a week. On a Sunday evening, once the kids are in bed, I'm going to go in and look at these, or on a Monday morning, or, whatever floats your boat. Others might say, I'm just going to look at it monthly. And other people might look at it daily. It depends on, what type of time frame, how soon you want to go, wherever it is you want to go. If you're looking for income. And Google, I forgot, we've set this up, but we wanted to look at around this level, creating an alert saying, perhaps sell a covered call as a possible way. Now, we could sell the covered call and it could pull back and we'd make the money on the covered call. But if our goal was to treat this as an income generating strategy where we don't intend to be in it, sometimes you sell the covered call and you don't get called out as a possible way of closing out the position. So I don't want anybody to think this is a done deal. We haven't even sold the call yet. And why are we waiting? Well, if we look at the trade tab and look at, say, March, and look at a covered what we received to sell a call that's close to where it's currently trading. So It closed at 184. If we sold the 190, we get 435, something $4 above. But if our plan is to maybe sell the 210 when it's trading at 186, if we went up and looked at the 210, you get 60 cents. That's kind of ding quack quack, right? Like it's not very much. So if we're going to use a covered call as a potential way of exiting the strategy for this stock position for a profit, we're better to sell it when it gets up close to where we were thinking of exiting anyway. When, you know, we're not going to get 64 cents, we're more likely to get $4.60. Does that make sense? Are you guys picking up my nefarious strategies here? Okay. Shall we do another one? Okay, so that's the Goog, that's Verizon. Okay, so there were a couple of other ones, and I thought, like, Google can give you a bit of anxiety looking at this chart, right? Like there's been a lot of, you know, it's been kind of consolidating here, but Fox has just been easy peasy lemon squeezy. It's above the 100-day. We could put this in a textbook for a chart that has been using the 30-day moving average as a support level, just been, you know, kind of moseying on up that hill. Nothing to cause you any angst. And I mean, that could change. And when could it change? It could change tomorrow. But we're on the other side of earnings. It beat expectations. And if we want to see what the analysts are thinking about it, you know, we can come out here and you can just click on any of these and read them. But, you know, I want to see what was the analyst reaction. Well, Wells Fargo pushed up the price from 59 to 64, 43 to 53, $10. Like that's a 20 some percent increase. 49 to 54, that's 10%. You know, 39 to 50, like that's 20%. Yeah. So everybody seems to be raising price targets. And so if we look at this and we say, well, anything else I might want to look at? Well, if you don't have that red bar, you can go to my X feed and it's posted at the top, but PE ratio of 11. Yield doesn't look pretty exciting after looking at Verizon, does it? But it's still 1%. It beats a poke in the eye with a sharp stick. Now, no company is guaranteed to pay dividends forever, first of all. So, you know, they could rescind that dividend or decide that they're not going to pay it. The other thing is that in paper money, one of the nuances or differences is that in your paper money account, they don't actually pay dividends like they do in a live account. So that's another one of the differences in the platform. But if we wanted to add this as just part of our portfolio as a trend trading growth stock that again might be tariff agnostic, you know, and if we look at the Analyze tab and it says, you know, it's headquartered in New York, but it's a news, sports, and entertainment company in the US. So it's cable network programming and, you know, so they have a studio, but, you know, all of these markers here, earnings per share, sales per share, I mean, they've all gone up in the last year. And it's got that attractive price earnings ratio as well. So maybe we just add this to our portfolio. And where might we put a stop? Well, we might say, hey, where's a recent low? And, you know, we might say, well, you know, the day it gapped up, it came back and retested here. That low was 49.33. So let's put our stop 3% below that. So we're going to trade, 49.33 times 0.97. Now you might want to use 2% or 5%. You can, you know, use whatever you like, but our stop on this is going to be 47.85. And so if we have 47.85 and we're paying 52.17 to get in, so if I subtract that, 52.17 How much are we risking per share? $4.31. Okay, so if I'm risking $4.31, I'm going to take my 3,300 divided by 431. Yeah, again, we could buy 770 shares, 765 shares. So our position size is we don't want it to be more than 50,000. So we could buy, about 1,000 shares. Well, and that would be 52,000. This is saying we don't want to buy more than 765. So we might knock it down to 700 so that we're not taking more risk, because if the stock gaps down, we could end up out at a lower amount. And so we're going to right click, buy custom with a stop, and how much are we buying? And some people might say that $1 million account, like that has me kind of thrown because I don't have a $1 million account. Well, if you wanted to play along in your paper money and you have less money in it, you could say, well, I'd like to do this in my paper money account with 100 shares. Just position size appropriately to what you might, consider trading, if you were to trade in a live account. And these are all just for example purposes only. None of it is to be construed as a recommendation, but don't be intimidated by the portfolio size. So we're going to make our stop good till canceled. And we can see here, this bid-ask spread is a lot wider, 51.92 to 52.37. And so what we might say is we'd rather put this in as a day order. And, we don't want to pay more than that 52.37 and see, where that fills in the morning. And then I'll look at these again in the morning and we'll just see how we made out. And so we're going to put that in our growth stock group. And this is just an uptrend. And this is, I'm typing in bull flag. Sometimes I don't explain everything, but, we saw this dramatic move to the upside, right? Do you see the pattern that I'm seeing? Where it moved up, pulled back for 3 days. Again, you could put this in the dictionary beside bull flag. Now, technically, this was our low day here. Did we have a close above the high of the low day? Well, it may have been the next day or for sure the day after that. But we weren't together yesterday or the day before for this class. So, we're doing it today. But could we have been in a couple of days earlier? We could have. And you can always click and drag on your chart if you want to see, like here, that does look like it closed above the high of the low day, 50.46. It closed at 50.72. So, had we had this on our watch list, we could have been in here and enjoyed, this bit of, swing to the upside. Okay, so that's Fox. Now I've got one more that I thought we could have a quick look at. Expedia. And, this is one that, was kind of on the struggle bus for part of last year. When we looked at February through really August, it was kind of looking ugly, wasn't it? But, if you draw those lines, it helps lead the eye. And then we had this, head and shoulders or this big fat pennant where, we had this cup and handle. I say kind of like the Russian stacking dolls where it's cup, handle, or cup, handle. And then it broke to the upside and, had another pullback, but it's breaking out again. And so, could we go through this same process? And we could. And again, Expedia, many of you have may have used this resource. And again, Earnings per share went up 40% last year from $5.31 a share to $8.95. Sales are on the rise. So people are still traveling. And so if we look at this, might that be a possibility? So we're running low on time. I wanted to show you a couple of things. People are mentioning Crocs. Like, there are a lot of stocks that have been, moving up dramatically and down dramatically. Crocs is one of them. Someone asked if I thought it might be a short squeeze. 9%, of the stock is shorted, which is pretty high. So it could be, so who knows? I mean, there was a lot of drama in the markets. I'm just trying to find my page. Deere had a somewhat dramatic move, gap down on the open, and then rallied quite nicely by the end of the day. AppLovin absolutely soared today, up 24% in one day. TTD on the other side absolutely tanked, down 33% in one day. And then Datadog was another one that got kind of hammer smashed, closed down 8%, but at one point, it was down dramatically more than that. And then Reddit, that hit, well, compared to, it's all relative, right? To TTD, that looks positively pedestrian, only down 5%. But this can happen over earnings. And this is why, we sometimes avoid that. John is asking if we have a survey. I don't believe there is a survey today, but what I ask is that you subscribe to the channel. Okay, so subscribe to the channel just by hitting that subscribe button down in the bottom right corner, and then you can find all the archives and all the other goodies that you're interested in tapping into. The other thing I'd ask is that you hit the like button, because by hitting like, it lets Mike and I know that you found this content valuable, but more importantly, it moves this up in the algorithm so that more people can find this content. And so if you do me a favor, or do a favor for a random stranger whom you may never meet, that would be awesome. And you know what? Don't forget to follow us in the land of X, formerly known as Twitter. And that was another one, I'd forgotten that Elon Musk had taken it private, because, what's another service? Meta. Interesting, right? And look at the terror Meta has been on. So interesting stuff. So guys, thank you so much for joining me. If you enjoyed this, share it with a friend. We'll continue to invest over the coming weeks and months, and we'll do both stock strategies and option strategies. And I'll look forward to seeing you then. Tomorrow, trading a smaller account is at high noon Eastern, and would love to have you join me for that. We kick off the day with James Boyd and Kevin Horner, and they are talking about ETFs. So you won't want to miss that. That's as the bell rings at 9:30 a.m. Eastern. So Mike, thanks for your help in the chat. Thanks to the people behind the scenes for helping bring this webcast to life. And thanks to all of you. Bye for now.